What's up, everyone? Good afternoon. How are we doing today? Hope everyone's had a great weekend. Looking forward to getting back to business here this Sunday. Can I get a mic check real quick in the chat? Hey, Sim. Greetings from Norway, ICT fam. Thanks for joining. Thanks, Janisha. Alrighty. Well, let's get right into it then. So just some things to keep in mind this week. Specifically for indexes, we have had a consolidation week for the most part, not really a big range. So I'm expecting this week to give us a bigger range and more price action to trade within. With that being said, same bias for the most part with the assets that we were looking at last week, still anticipating risk on. So let's get right into that now. So looking here at the dollar index on a monthly chart, I brought everyone's attention to this inefficiency on a monthly here in blue, and then we traded into that slightly the previous week. So previous week, all targets were hit on dollar, and then all of our upside targets were hit for Forex. The laggard was the indexes. Yes, we did have an up-close week, but they were stagnant and lethargic for the most part. So just to keep in mind our higher time frame, what we're looking at on a monthly, and then just for a quick recap, we like to do top-down analysis because if we can say with high probability where the monthly is likely to go, this makes charting the weekly easier. This makes charting the daily easier than the hourly, 15-minute, 5-minute, 1-minute, and so on. So that's the importance of a proper top-down analysis and why it makes trading easier, and it makes filtering bad trades a much easier process as well. So just in mind that I am expecting for us to expand lower into this inefficiency on a monthly chart. So now let's refine this on a weekly. Oh, and then one more thing before we drop down into the weekly, I did take our attention to this volume imbalance here, traded up into it, rejected it lower. So we are seeing bearish order flow on a monthly basis. So now dropping down into our 1 week time frame, all objectives were delivered last week. We took out this external range liquidity, which was my final target, and this delivered beautifully on Friday. So we hit our objective for the week, and then we traded off the lows into Friday, which is what we expect in a typical bearish week. Thursday, Friday to round off our low of the week, and then trade back into the weekly range that we've created. So beautiful delivery on our Forex last week. Euro, British pound, all delivered beautifully in line with exactly what we were looking for on the basis of what we were expecting for dollar. So looking here at the dollar index on a weekly chart, we're seeing bearish order flow. What are these two black lines here? This is our implied fair value gap. It's where two wicks overlap. So we don't need a fair value gap to get short in. We can also use the wicks as a PD array. So what these two black lines are is this measures the 50% of our wicks, which would be an algorithmic reference point. So we have the 50% of this wick here, and then 50% of this wick. So we would treat that just as we would a fair value gap. Price trades into it, rejects beautifully, and delivered into our downside objectives. So as I said on the monthly chart, we can refine our inefficiencies as we drop down into the time frames for more precision. And this is the more specifically the level I'll be looking for on a weekly chart. For the most part, this is all balanced delivery here, and then we have already rebalanced this fair value gap in here. So I will expect lower delivery down into this fair value gap on a weekly chart, and this is our 99.571 level. So on a weekly chart, I am expecting expansion down into this level here. Also looking, we have relative equal lows here. We have traded up off them, so there are traders with sell stops below here, and I will expect those to be taken out into this coming week. Perfect. So dropping down into a daily chart now. We've been seeing bearish order flow, just zooming in on this piece of price action here. Bearish order flow right into our discount objectives. External range liquidity was the target, and this was delivered beautifully this previous week. So as I said, all targets were hit. So now what will I be looking for into this coming week? I am still expecting risk on, lower dollar, higher foreign currency, and higher index markets. So here we have a fair value gap, a city, and I would want to see price give us a reaction in here, trade up into it, and then go lower. What I do like the favorable setup that we have going into this week. We've traded down into this key level and then bounced off it. I love seeing that, especially when it leaves relative equal lows, because a lot of traders that trade retail concepts, they see this as a double bottom. They see this as support, so they're trying to get long in here and trail their sell stops below these relative equal lows, and we will look to target those into this coming week. So as I said, I would want to see price get heavy inside this fair value gap if we are to trade lower. Barring any displacement higher, trading through these premium arrays, that's what I will be looking for. So now zooming out a bit on our weekly chart, what specific levels will I be looking for? Well, target number one for this week will be the sell side liquidity below the relative equal lows here. As I've said, we've traded off them, so there's sell stops below here that the market will want to accelerate down into. We have sell side liquidity below this low here. That will be target number two. So the 99 big figure number, 99.8 is the level I will be looking for my second downside objective on the week for dollar. And then third objective will be the 99.5 big figure number beneath this sell side liquidity here. So I will be expecting expansion lower and delivery into these sell side objectives as long as price does give us a favorable reaction lower inside of this daily fair value gap in here. Assuming we get further acceleration on the downside, a level of interest for me is this inefficiency. Mark this out in blue. So we have a daily fair value gap, a BISI in here. So assuming we accelerate through these downside objectives and we do get an overzealous delivery this week, I will be expecting this fair value gap here to be our final target. So this is what I'll be looking for into this week and even into the next coming week. As I said, barring any displacement higher and rally through premium arrays. So real quick, just taking a look at last week's price delivery. We had the opening on Monday, traded right into a key level we were paying attention to these past couple weeks. This is our volume imbalance or liquidity void. So there was no trading. So the algorithm has no data for this price level. So price trades into it, offers buy side, sell side, we leave it, and then we retest it. So this becomes a balanced price range. And that's why we hit it like a brick wall on Monday's trading. And then we rejected that lower right into our discount objectives for this week. So now dropping down into a 4-hour chart, keeping in mind everything we've been looking at in terms of bearish price action and lower prices. Where did we stop? I left you guys off last week with we're inside of this parent dealing range, so we will look for premium. And on an hourly chart, we nailed the fair value gap that we were looking for. More specifically, what level did we trade up into? The opening price of this bearish order block. Hit the opening price to the point, or pip actually in Forex, and then traded off those lows right into our discount objectives. So going into this week now, let's clean up the chart and let's drop down into a hourly. So let's mark out this low. So we did take out key external range liquidity, so it is logical for us to see a retracement higher back into the range. Once external range liquidity is taken out, we then expect some measure of internal range liquidity. So what would that look like? So traders that were short that did not take profit at the external range liquidity that we were looking for, where would their stops be trailed? Well, first set of buy side would be here. Second set of buy side would be here. And then we also have these relative equal lows here. And then Friday's trading ramped up into these key levels to take a measure of internal range liquidity after trading into significant sell side. So now going into this week, what will I be looking for on an hourly chart? Well, we are trading within this dealing range here on an hourly, so the inefficiency, and we can actually even refine that into this high. The reason I like this high is because this is where the energetic rand began from. And then we also have a high here that took out buy side and a low that took out sell side. So that's why I'll use this as our dealing range. So in premium, what key levels do we have up here? We have this fair value gap here. So I will want to see how we trade inside this key level. I will want to see price open, trade up into this key level, break down, and then deliver us into our sell side objectives. If we trade above this key level, that would be problematic. I'm personally not favoring that. It's premium. We're seeing a sell program, bearish delivery, so I will expect that to continue into the week. So I will want to see a reaction into this level to deliver us lower into our discount objectives that I've highlighted. So moving right along into the bond market. Let's look at this on a, not much on a weekly chart. Let's go right into the daily. So looking at T-bonds here, let's zoom out a little bit. That's big. So we have been trading up into a bearish breaker. So our last down close candle, high, low, higher high, makes our breaker. So we want to find the lowest down close candle. Price traded into it multiple times, we rejected it, and we've done so again. What's significant about this price level here is that we have taken out a significant buy side liquidity in the form of relative equal highs, and then we have rejected that. So we've traded up into the buy side here this week. This is what we were all anticipating and looking for. We had all these relative equal highs here. So on Monday, or actually Friday, where I took everyone's attention to up here, we delivered up into that buy side beautifully into Thursday, and then we have rejected that buy side liquidity, trading down into the discount of this range we're trading in. So I'm favoring lower delivery here on the T-bonds, and let's zoom into the price action that we're trading in. So we are trading within this dealing range here. Key levels that I'm seeing that have my interest are these relative equal lows here, the form of sell side. So traders that did not take partials above here or profits, they have their stops trailed below here. So I will expect us to take some measure of sell side. Another thing that has my attention is this volume imbalance. We have not yet had a body laid over this price action. So this will remain a factor until we do that and offer efficient delivery. So we have sell side, we have a volume imbalance, and then we also have a fair value gap that we did classify as a breakaway fair value gap in real time. The thing about breakaway fair value gaps is they do not fill in until higher time frame objectives are met. These have been met, and then it will look to fill it in after reaching the objectives. Breakaway fair value gaps are an algorithmic signature that price is moving somewhere with speed, and it's going to want to get there. And then once these objectives are delivered, then we can expect a redelivery to our inefficiency. So first target on the downside for T-bonds this week will be volume imbalance, sell side, and then this fair value gap in here. So let's clean this chart up a bit. Why am I favoring bearish order flow? Because as soon as we saw this buy side taken out, we immediately went into sell program. What indicated to me that we were in a sell program? Well, now looking at this fair value gap, let me make the lines thicker. If we were bullish, we would expect price to trade into this level, find support, and rally. Instead, what did we do? We traded below it, and then now we see how the bodies are beautifully respecting this discount level, and keeping in mind that we are inside of this higher time frame bearish breaker. So we are inside of a higher time frame discount array. We've taken out buy side, and then we've rejected it, and now we are showing bearish order flow. So this is indicating to us that price is in a sell program. So this is why I am expecting discount objectives to be delivered, barring any displacement higher or erratic price action. These are the three objectives I'll be looking for on the week. So moving right along into our ES. Let's go on the continuous contract so we can see the relative equal highs more cleanly. So I've been getting a lot of questions as to why price action has been how it's been on the ES. So looking at a monthly chart, and it's even clear on the weekly, we've just been in a consolidation. We haven't been going anywhere. So let's take a step back and just analyze the situation and the climate that we're in so that we can have more context for why we're seeing this. We need to keep in mind there's a lot of things going on right now. There's a lot of banking shenanigans going on in the United States. I'll leave it at that. We have a lot of questions as to what our new form of currency will look like. These are all things that investors and high net worth firms are weighing out. So with all this uncertainty and then also WAR all around the world, these are things that do make it an uncertain climate. So what big money or big firm is looking to say, oh man, I got to risk some capital in these markets right now with all this uncertainty? Absolutely not. Most of big money is sidelined right now, waiting for some sort of fear or opportunity to be presented in the market. And as of right now, no big money entity is saying, I've got to risk money in these markets right now, given these times we're in of elevated risk and all the factors that I've just outlined. So that's a reason why we're seeing this consolidation on a monthly, weekly chart, because of the current state of events that we're in, and that's very important to monitor as traders. So dropping down into our weekly chart now, we've really just been in consolidation. Looking at the dealing range that we're trading in on a weekly, we haven't been able to leave this, and we've pretty much just been consolidating around equilibrium, which is not what we want to see. We want to see price trade into equilibrium and then quickly expand away from it, but we have not been seeing that. That's why my trading has pretty much just been intraday scalping, and I've been very leery about trusting big price range expansions because of the climate that we're trading in that I've outlined and what the technicals are showing us. We are consolidating near the equilibrium and showing an unwillingness to expand away from it. Do I think this will continue for quite a while into the future? I personally don't. I think price action will get very animated moving forward, especially with the underpinnings of all these events that I've brought up. So I do not expect this to persist for long, but while we are in this climate, we do need to be mindful of the environment that we're trading in and adjust our trading accordingly. All right, let's take this off. Okay, so looking at price on a weekly chart, as I said, up close candle, we're trading through it. Volume imbalance here, small gap between the bodies. We're trading through premium levels, indicating price is in a buy program, seeking premium. So price has been continuously expanding higher. Yes, we didn't see much of a range last week, but nonetheless, it wasn't up close as we were expecting with a lower dollar. So what has my interest going into this week? We have relative equal highs here, buy side liquidity, and that's what I will be expecting to deliver. Now going into the official contract that we're trading this week, which I do like to look at. So we have buy side above this high here. And we have a volume imbalance here. So these were all price levels we were looking for in the previous week. As I said, not much movement this week, so I'm expecting a larger range this week. So I will expect buy side and then a repricing to this volume imbalance in here. So that's what I'll be looking for on a weekly. So weekly chart, bias is bullish, expecting a higher expansion. So now let's drop down into our daily chart. So buy side above this key high here, key SMT between the NASDAQ, and this looks cleaner on a 4 hour, so let me show that on a 4 hour real quick. So whereas the NASDAQ made a lower low here, ES said, no, I'm going to sit this one out. So what does that indicate to us? That the ES is under heavy accumulation. So why would we also expect the ES to be under heavy accumulation? Because it has yet to take out this external range liquidity here, whereas the NASDAQ already has. So the ES is trying to play catch up. So as I shared with you all last week, we are expecting the ES to be the stronger pair. And then I also shared some fundamentals as to why we were expecting this, and that has to do with interest rates and oil as financial sector, and energy sector is heavily weighted in the ES as opposed to the NASDAQ. So we do see the ES is under heavy accumulation, and this is confirmed to us algorithmically through the SMT by the ES failing to make a lower low. So now let's look at the key levels that we've been looking at last week. So I took everyone's attention to this bullish breaker that we're trading in. So bullish breaker, fair value gap within the breaker. I also shared with you all that this fair value gap here and here would likely be breakaway fair value gaps. Why did I anticipate that? Because we have a breaker. So usually when there's a breaker, it will not allow price to trade down into these lower inefficiencies before reaching higher time frame objectives. So that's why I expected price to find support in here and rally. And then another algorithmic signature that's tipping its hand that the ES is bullish is looking at the 50% of this inefficiency. No bodies were able to close below that 4105.25 level, indicating price is bullish, and no body closures below the consequent encroachment, indicating we are extremely bullish. And then the SMT was the final confirmation that price is indeed bullish on the ES. So first target for ES this week will be previous week's high at the 41.89. Second target will be 42.05. And the reason I have targets so close to each other is because we have been dealing with small ranges. So I do not want to have too overzealous of price targets. So second target will be this swing high here at the 4,200 level. Next target will be the 42.23, and then last target will be the external range liquidity above this high. And then I shared with you guys on the weekly chart this volume imbalance that we're trading within that I do expect a repricing to. So all my targets on the daily chart, and then on a weekly chart we have that overall inefficiency that's up here that I will expect to be redelivered to. How we trade at these levels will be something we'll discuss next week. Just tipping my hand to what I am expecting. I do believe we have unfinished business below these relative equal lows. As I said, that's something we will touch on when we get to there. As of right now, we're seeing bullish order flow, so we have to trade the markets we have in front of us. Dollars accelerating lower, we are seeing risk on, so I will anticipate higher delivery on the index markets. So now dropping down into our lower time frames. So on an hourly chart, we're trading within this dealing range here from high to low. We did trade into discount, which is what we would expect because we took out this high here. And why is this high significant? Because this was the high made on CPI. So we rallied higher and then we displaced lower energetically. So large fund traders, hedge funds, even retail traders will trust a stop above here because look, we cratered on CPI. So the market should just keep going lower. However, that's not how we're looking at the market. We're looking at the market top down. So the market will want to come up and take out these relative equal highs. So we did have a high from CPI, which was significant. And then we had a high from Thursday. We rallied up into that high on Friday, took out this buy side liquidity. So now smart money, if they accumulated these buy stops and sold to them, where would they want to look to distribute those positions? Down here in a discount. Which level would we be looking at in discount? Fair value gap. Actually, let me do that with black lines so I can actually highlight the breaker as well. So discount fair value gap, and we are trading within a bullish breaker right here. Bullish breaker, discount fair value gap, price trades into it beautifully, and then we see a nice reaction higher. So I will expect these key levels to support price going into the week to then send us higher. I would not want to see these key levels violated because if we do violate this breaker and fair value gap, then we are likely to come below these relative equal lows. I do expect these relative equal lows to remain intact until we reach our premium objectives. However, if we do get below these key levels here, that could be early indication that price is likely to trade lower. Too deep, why the dealing range is not lower? Great question. So this is a question I frequently get. Why would I not measure the dealing range from here? And why do I do it here? So whenever we see a price leg and it's two stages, I like to measure the most recent stage of price action for my dealing range and where the energetic run begins from. So we see the energetic run that starts this price leg originates here. So that's where I'll measure my dealing range as opposed to here, because I see this as a two-stage price run. So I'm going to measure it from the most recent stage so that I can get a more accurate dealing range measurement. And this takes us into a question that I received from Soren C. So let me go ahead and read that out to you guys. Hello, I have a question. I noticed that sometimes the breaker block does not work. When the price returns to the breaker, it fails and does not reject from that level. So for example, the S&P on Friday. So let's take a look at that. And I believe that was a 30-minute time frame that you shared in the chat. All right, so let's take all this lipstick off here, the chart. I do actually want to keep the bullish breaker on. So let me change the time frame. And the reason I'm keeping these key levels on here is because of the higher time frame analysis that we are looking for. So the question was, why wouldn't we expect this breaker in here to reject price lower? And that's a great question because it is a breaker. So we have a higher high, displace lower, price should trade into it and reject. So why did we not see that? Well, we need to keep in mind top-down analysis. Higher time frames are always going to be parent to the lower time frames. So what's the weekly indicating? Higher prices. What's the daily indicating? Higher prices. What's the hourly indicating? As I shared with you all here, price traded down into our discount levels, and then we see a beautiful reaction higher. Price was unable to trade to the consequent encroachment of the fair value gap, indicating that price is bullish. So we do see several bullish signatures top down, which is the key. So this is why this 30-minute breaker is insignificant in the grand scheme of things when doing top-down analysis. So with the dollar raging lower, with our indexes screaming higher on higher time frames, showing bullish order flow, all that will be parent to the subordinate dealing ranges. So the focus should be discount arrays supporting price higher and price trading to and through premium arrays, not trading up to them to reject lower. So it's really the hierarchy of top-down analysis, and that's how we're able to filter out premium arrays that we would expect price to reject if we were bearish, but we need to keep in mind the higher time frame analysis. Latrice, so what days should we be looking for USDX sells and foreign currency buys? That's what I'm confused about. Consider time and price. So a typical template for a trading week on Forex, well, any asset, if we're expecting a typical sell week, high of the week would typically form on Tuesday, low of the week should round out Thursday, Friday. But what's the logic behind that? Why do we expect that? So let's look at the dollar index on a weekly chart, and I'll explain why it is we look at that, because we look at the lens through the lens of power of three, which is accumulation, manipulation, distribution. So let's take all this off. It's okay. So our opening price on the weekly chart is right here. So this is also a quick recap on power of three. So we have our opening price here, and let me make that purple. Okay, so our opening price is here. So if price opens here Sunday, and we want to see lower prices, price is not just going to open and just rip lower. It's going to want to manipulate higher. Why is it going to do that? Because as informed investors, as I shared here on a hourly chart, going into this previous week, if you guys watched last week's recording, which if you are unsure on this, I would counsel you to do that. I anticipated price would deliver higher here into a premium. Did I expect we were getting a gap open here and then just immediately trade lower? No, I was anticipating price opening right around where we closed, and then I was expecting a manipulation higher. Why is that? Because retail seeing their relative equal highs here and here. So they see this as resistance broken, price is rallying, the dollar's going to 150, let's buy it. Whereas what were we looking for? We're looking for the market to deliver up to a premium, to reaccumulate short positions, expensive, and then to deliver lower. So this is the timing aspect, and I hope this answers your question, Latrice, as to why we expect lower prices only after we see the accumulation stage, which is right here. So this is the accumulation. Let me make that green. We see our manipulation here. I'm going to make that red. And then this is our distribution. Make that blue. So we accumulate here. We manipulate higher, getting traders that do not know what they're looking at off sides. Whereas what are we looking at? We're looking at price going to a premium to then deliver lower. So then after this manipulation, we then see a distribution of those shorts that were accumulated up here. So that's how you'll incorporate the timing aspects into the bias that we're sharing with you all on the weekly look aheads. Because another thing, one of the biggest questions I get is, Dylan, how do I do daily bias? I can see all these things in the chart. I can see these PD arrays in the lower time frame. If I just had the daily bias, this would solve all my issues. I don't think that's true because there's so much more to it than just, okay, where's the daily bias? Daily bias, trading in line with it, does filter out low probability trades. Because if you were trading this week, what's going to be higher probability and likely to pan out for you? Long setups or short setups? So with what we're providing here, it allows you to filter out trades that are unlikely to pan out for you and allows you to trade in line with higher time frame institutional order flow. Cynthia Garrison. I believe that's Earl. Yeah, Earl, let me take a look at that for you and share why I was looking at the bodies and not the wick on. Let me take a look at that for you. Yeah, thank you, Latrice. Thank you for the question. Did that cover what it is that you were asking? So the reason I just looked at the bodies was just to refine it a little more. There really isn't anything wrong with looking at this down close candle all the way down to the bottom, or the up close candle all the way to the bottom of it. Because if we were to look at this on like a 30-minute, this would be the entire breaker. But just to refine it a bit more, I went ahead and looked at the bodies. What specific level was I expecting price to react in? More specifically, I was looking at this fair value gap. So there's a PD array within another PD array. So let me make this one darker. So I was expecting price inside of this breaker. I personally refine my entries a lot. So I'm not just going to look to go long inside of this huge price range. I'm going to look for a very specific price range, which would be this hourly fair value gap in here. And then refining that even lower on a 15-minute, we can refine that even better looking at these relative equal lows here, and then this fair value gap on a 15-minute, and then we refine this even more so here on a 15-minute. And then, as you know, I would then drop into my 5-minute, my 1-minute, and then that's where I would look to do my executions. Okay, and then let me get to Denisha's question, and then let me read that out to you guys so you know what it is I'm sharing. So the first thing was fractal fair value gaps. So I shared with you all last week. So you spoke about fractal fair value gaps last session, saying that a fair value gap on a higher time frame is just a low on a lower time frame, and it's just a swing low, leading to the fair value gap's effectiveness of trading back into it because there are stops and it's an intermediate term low that could be mistaken for a false market structure shift. Can I give a few more examples? Yes, absolutely. So let's look at the NASDAQ. It's been pretty clean in its delivery. So let's look at it on a weekly chart. So first example, NASDAQ's been bullish. It's been the relative strength leader. So that's why I'm looking at that. Yep, awesome, Mr. Garrison. Did that cover your question, sir? So looking at this, let's make it dark blue. Let's make it 2 times the thickness. Awesome, happy to clarify that. Okay, so this is a fair value gap on a weekly chart. We see the bodies are respecting it. The wicks are what do the damage. So the real narrative is told in the bodies. And this indicated that price was bullish on NASDAQ as we were unable to close and accelerate below the weekly fair value gap. So now let's dive deeper into this concept of a fractal fair value gap and why it is so effective and why we do look to use this for entries. One of the biggest things is, yes, this is an inefficiency. This is one-sided delivery from this high of this candle to the low of this candle. Make that light blue. We do have an inefficient delivery here because this is just buy-side delivery offered. So the logic behind it is algorithmically, the market wants to offer efficient delivery and sellers were not given a equal opportunity to participate inside of this price range. Is the market trying to be fair to us and allow us to be fair and get our fair share of the market? Absolutely not. This has nothing to do with that, but it is trying to offer efficient delivery. So now let's look at the low or the high end of this fair value gap on a daily chart. It's a swing low. We were already anticipating higher prices as we saw the change in the state of delivery on dollar index, indicating the markets were now risk on. So now we want to see, as I highlighted on the weekly, the body's respecting this level beautifully, indicating that price is actually bullish as we were not able to get acceleration below these key discount arrays. And then looking at this even a step further, this is a bullish breaker. Bullish breaker, last up close candle, trade lower through a swing low, displays higher. Where would we expect support? Inside the breaker. As I said, I'm not just going to look for buys inside a big price range. I will refine that. So where would I refine that? Into the fair value gap inefficiency within the breaker. So back to the question. This purple or blue line is the high end of the fair value gap, and this is also a swing low. So there's sell stops below here. So as we know, what is smart money going to look to buy? They're going to look to buy these sell stops to then accumulate and rally higher. So now let's look at another example. So we have a fair value gap right here. So as I said, yes, this is inefficient delivery. It will want to trade back into it to offer efficient delivery before continuing higher. But more specifically, what's going on a lower time frame? Let's look at this on a hourly chart. So this same upper portion of the fair value gap is now a swing low on the fractals of the lower time frame. So if we're already looking for higher prices, we are expecting price to trade into this daily fair value gap. What makes this so effective? Well, market structure traders, and not market structure through the lens that we look at it by classifying significant highs and lows. I'm talking about retail that's looking at higher high, higher low, higher high, higher low. They're tripped up here. Why is that? Because they see a lower high and then a lower low. So they're already looking for shorts, lower prices, and they see that their stop loss was taken out, because if they trailed it, they're more than likely not trailing a stop loss properly. Us as smart money traders, at a minimum, our stop loss would be below here. Make that orange. Why would it be below here? Because it's below a PD array. Whereas uninformed traders or speculators will look to put their stop loss below just any random swing low, because that's what the books tell them to do. So they're jamming their stop loss up as quick as they can. They get taken out. Who absorbs that sell side liquidity? We do, smart money, who's looking for higher prices on NASDAQ and lower dollar. So this is why the fractal nature of fair value gaps is so effective. And then looking, and then let's look at one example. Now let's look at a bearish example here. So let's look at this fair value gap here. This is when we were looking for lower prices. So we had yet to still take out this swing low. So we were looking for sell side on NASDAQ. So let's look at this low here, the low of this fair value gap inside the lower time frames. Let's drop into a 4-hour. That's not as clean. Let's look at it on a 1-hour. Okay. So this is the low end of that fair value gap. Market structure traders, people that trailed their stop loss incorrectly, they will look to jam it up above the most recent swing high. Price drives up into that, absorbs that sell side, and then takes it lower. So what's retail seeing? They're seeing a higher high, higher low. They're looking to buy that. Whereas we're just looking at this as a return to an inefficiency to continue delivering lower to our discount objectives. So I hope that clarified the fractal fair value gaps and how I use them in my analysis. And let me get to the second part of your question. Yeah, absolutely, Denisha. It's my pleasure. So also I've noticed that you use the 10-year yield and the 30-year yield for interest rates. Are there specific scenarios that you use each for, or is it just preference? So let me go into why I use them. Whenever I'm looking at a specific asset, for example, when I look at ES, I look at the NASDAQ. When I look at the dollar index, I look at the euro. When I look at the interest rates, like the 10-year yield, I like to look at the 30-year yield. This allows me to gauge market breadth through intra-market analysis. So let's look at the 10-year yield and how I use them both in my analysis. So as you guys remember here, as we traded below these key lows, we actually did call higher prices up into a premium here. One of the big reasons was because, I'm not going to go too deep into it, support here, none of the bodies were really able to close below it. So what was the final confirmation for me that I was expecting higher prices into this inefficiency? That's where the 30-year yield comes in. And since they are correlated pairs, we are able to use SMT for this. So because the 30-year yield said, no, I'm good, I'm going to sit this one out, it failed to make a lower low, indicating our SMT divergence. So this indicates that the 30-year yield was under accumulation, and this was additional confirmation to expect higher prices. So I use them both to gauge intermarket analysis to use for SMT studies. And that's why I personally look at two correlated pairs of the same market. So that's why I use the 10-year yield and the 30-year yield for SMT analysis and intermarket analysis to give me a closer feel and see the algorithmic signatures between correlated assets as it tips its hand as to what we're likely to expect and gives me additional confirmation for a bias that I already have. So let's see what other questions are in the chat. Awesome, Denisha. I'm glad that clarified for you. So I vote Borov. Using power of 3, does that mean we can expect ES lower prices into discount during Monday and Tuesday, and then look for longs the rest of the week? Of course, depending on how it plays out and if it respects PD arrays. Absolutely. That's exactly what we'll be looking for. And I do like the way you said, depending on how it respects PD arrays. It's not always just going to be a slam dunk. Okay, we trade into a discount. Let's just buy it and hope for the best. We do need to see how price trades inside of specific discount levels. So a perfect example would be this right here. So yes, we traded in the discount, but it's not just an automatic buy. I want to see how price reacts inside of this key levels. Then here we see that this fair value gap, we were actually unable to deliver to the lower 50% of it. So being unable to hit consequent encroachment is a bullish signature, indicating that price is bullish. And then we saw a nice reaction higher here. So going into the week, what will I be expecting in terms of manipulation into Monday, Tuesday? That'll be interesting to say, just because on an hourly chart, we already did deliver it into discount. So I would expect this bullish breaker and fair value gap within this breaker to support price. So I wouldn't foresee price going below this before propelling higher into our premium objectives. If we do trade lower than this, then that is problematic for upside, but no worries, we'll just get in line with what the market's showing us. And then I would expect delivery down to this sell side liquidity here and potentially these relative equal lows. But a lot of this depends on gauging the market sentiment with the dollar index. So that's what I'll be looking for and anticipating for my E-mini S&P trading this week. Ghost, this is such an underrated channel. Shame. Appreciate that. Thank you. Awesome. So let me get to the last few questions here in the chat. Christian Cadet, Dylan, are you going to explain the ICT macro time that you set on the group chat later? What do you mean by explaining the macro times? Like how they're used, how I implement that in my analysis intraday? Because I actually do have a video planned. I was going to get into it next week regarding macros and how I use them. And I'll touch on them more specifically of how I use them in my analysis intraday. So I'll just touch on that here real briefly. Whenever I have macro times and I'm already looking for a specific bias, I will expect setups to form within that time, not delivered to the objectives within that time. So the setup will typically form within these time windows, but it needs to be within a greater context of what I'm already looking for. So I hope that satisfies you for now, Christian. And then, as I said, I'll be sure to make a full video on that going into next week of how I use them in my analysis and my trading. Alistair, current price is in a bullish OB on 60-minute. You don't expect the drop. 60-minute has a market structure shift. Could you clarify that for me, my man? And which asset you were talking about? The Chart Father, great content. Your delivery is perfect, calm, and extremely descriptive. I really appreciate that. Thank you, brother. Francisco, hello from Spain. What's going on, my man? Happy to have you. CRY, hi Dylan, can you check out Bitcoin and E? Thank you so much. Yeah, absolutely. Let me take a look at Bitcoin. I was actually charting that up earlier today. Bitcoin, quite a rally here on Bitcoin. Basically anything denominated in dollars has been bullish. As I shared with you all, gold, we've been looking for higher prices on gold. That's been delivering beautifully. Why? Because it's gold priced in dollars. Silver, bullish. All precious metals, dollars being debased, deflated. They're printing it like crazy. So basically anything priced in dollars will go higher. And I'm sure you guys all see this in the grocery store as well. So higher prices on precious metals. This is pretty much a slam dunk to me. We've been talking about this for quite a while. So Bitcoin priced in US dollars, also going higher as the dollar gets weaker. So what am I expecting here for Bitcoin? Alistair, I'll be sure to get to that question on the ES, my man. All right, so what am I expecting on ES? Let's look at the higher time frames. So we have been seeing bullish order flow, and there was actually an SMT here between the between Ethereum. And then I like looking at the Coinbase feed. It's okay, we can use Bybit. So Ethereum here failed to make a lower low. We're already in a deep discount. We're extremely overextended on the low end on Bitcoin. Just looking at the higher time frame dealing range that we're trading within, price is in a deep discount. SMT inside of a key discount indicating price is likely to rally higher. We have been seeing lower dollar, which is further confirmation for what we are looking for. So we have an SMT at the lows. We're seeing bullish order flow. We see a displacement higher, shifting market structure. Price trades into this fair value gap in here. And then we've seen continuous rallying through premium objectives. We've also almost closed below this fair value gap. So it's pretty safe to say that my next target for Bitcoin will be this bit of inefficiency in here at around 33,000. And then assuming we accelerate through that, our next inefficiency on Bitcoin will be here at the 34,000 level. And then I will be interested to see how we trade here. Do we trade up into these key levels and then break down? Because also if we measure the dealing range, that is in a premium. So we have been oversold, and we don't need any indicators to tell us we're oversold. We can see that using the dealing range we're trading in. So I will expect delivery into these premium arrays, and then how we trade there will indicate what we do, and then this will be predicated a lot on dollar index. So same thing for Ethereum, higher prices on Ethereum. Look for your buy side liquidity pools and inefficiencies. Hope that answers your question, CRY. Alistair, current chart 60-minute. Yes, sir. Let me take a look at that for you. So ES. So when you say bullish order block, are you referring to these consecutive down close candles here or the most recent down close candle in here? Okay. Oh, okay. So ES has a 60-minute market structure shift to the downside here, but I think power of 3 response / question will allow for a run higher. So you did answer it. Thanks a million. Okay, awesome. Glad I answered your question. Yeah. So yes, you could see this as a market structure shift lower, but as I said, the most important thing to always keep in mind is the higher time frames. Everything showing bullish order flow into our premium objectives. SMT here, finding support inside of the daily fair value gap and the bullish breaker. So all that will trump the lower time frame analysis. So looking at this on an hourly, this to me is just a reaccumulation of longs and a discount to continue higher. I personally don't see this as continuation lower. If we do get heavy inside of this up close candle, then I will have to adjust, but that's what I am expecting. I am expecting this to just be a reaccumulation of longs inside of a fair value gap and breaker to then just continue higher. Santnet, Bitcoin got weekly bearish breaker around 2021 June area. Yes, and that lines up with those inefficiencies I am looking for. That's why I'm saying it will be interesting to see how we react inside of these premium levels of Bitcoin and US dollar. And one thing I've been meaning to cover for the past few weeks, it's been quite a few questions and analysis I wanted to share with you guys, is crude oil. Man, have we been smashing it in oil. Okay, so for those of you guys that are in our Telegram, and if you're not, you're really missing out. In the low 70s around here, I was taking everyone's attention in crude oil to these relative equal highs, and then now we are in the mid 80s. I am expecting continuation. I don't think we've seen anything yet with regard to crude oil. We are seeing extremely bullish signatures, fair value gaps not filling in, extreme gaps higher that are also not filling in. But let me break this down a little more for you guys and why I'm expecting continued bullishness. So let's break this inefficiency up into quadrants. And now let's look at this on a hourly. So you guys see this inefficiency from this close to this open. We want to break this up into quadrants. So this is our new week opening gap. So the 79.01 level, let's extend that through. So this is our upper quadrant. So just as I share with you guys on fair value gaps, whenever we look at the 50%, if I'm bullish, I don't want to see the lower 50% traded too, as that indicates price is extremely bullish and it's a signature I look for when looking for higher prices. However, whenever we see price not even be able to pierce the upper quadrant, as we saw here, perfect delivery. Let's look at the low end of this candle here, 79 beautifully. The low end right here of this next candle, 79. So perfect respect for the upper quadrant of this new week opening gap, indicating higher prices. So when we saw this gap up here, I didn't panic and sell all my long oil position. I did take profits above the relative equal highs that we were looking for, but I am still holding it. And if we do drop down into these inefficiencies here, I will want to see how price reacts, but I am favoring higher prices in oil, keeping in mind the context and the underpinnings that I'm sharing here with you all. And I threw in the oil analysis, no extra charge. Walter, could you take a look at EU? Yeah, absolutely. Yeah, so this will be the last question I'll take for today. So let's look at the euro dollar real quick. So it will be the opposite of what I'm seeing for dollar index. So euro delivering to our objectives beautifully last week. We were looking for previous week's highs, our first objective, this high here, and then we smashed both of those objectives beautifully. So now we traded lower, rounded out our high of the week, Thursday into Friday, and traded lower into the weekly range as we would expect. So what will I be looking for on euro? Same thing on dollar. We have a fair value gap in here. How we trade inside this fair value gap will indicate to me how bullish we are. If we do not get below the 50% and then we rally immediately, that's extremely bullish. If we trade and fill in this entire fair value gap, that's not problematic for upside prices. We can still see higher prices with euro with a full repricing of the fair value gap. However, I would not favor that if we are to be extremely bullish for euro. So upside targets for euro. First one will be the mean threshold of this bullish order block. So the 1.12 would be my first upside objective on your, or second upside objective. First one will be previous week high right here at the 1.107. That'll be my first upside objective on euro. Second upside objective will be the mean threshold here at the 1.1126. And then assuming we accelerate with speed through that bullish order block, or bearish order block, my final upside objective on euro will be the buy side liquidity above this high at the 1.18 level. So mark that out here. So that's what I'll be expecting on euro, and this will be my final upside objective, which would be the external range liquidity to this parent dealing range that we're trading within. And we can see this more clear on a weekly chart. And then assuming we accelerate above this high, we also have an inefficiency here, a volume imbalance, where no bodies were laid over. So I will expect a delivery and repricing into this inefficiency here. So that's what I'll be expecting for this week in euro. Too Deep, can you share on Telegram some of your entries this week on winning trades? Yeah, absolutely. And that's something I'm going to start doing a little more of. I've had quite a bit of stuff going on outside of trading that I've been having to take care of, but I will start sending in more analysis, trades I take, and breakdowns of price action on the day that I'm looking at, so that you guys can start seeing what I'm looking at, how I'm internalizing the price action, and I'll start breaking that down and sending that to you guys in the chat, just like I've done in the past. So I'll definitely continue to do that. Thank you for the reminder. And Denisha, you're absolutely welcome. Thank you for joining us. So with that being said, everyone, thank you for sharing your time here with us. I hope you enjoyed it. Hope you got value from it. And if you did, be sure to hit that thumbs up for me. It's greatly appreciated and really helps out our channel. If you could share this to other people, other traders in your community that may find benefit, I would really appreciate that. So with that being said, thank you all for sharing your time this Sunday with us here. I look forward to another great week of trading. I'll be continuing sending analysis and updates in the chat with what I'm seeing. Have a great weekend, be safe, and good luck and good trading.